Hello, folkies. How are you doing today? Earlier, people who were worried that the government in India is going to ban cryptocurrency are now considering investing in crypto. And I welcome it as a good idea. But as a new investor, there are few mistakes that you will be tempted to make. And the number one on the list is buying off recommendation of some influencer on YouTube or Telegram channels. The coins that these influencers are suggesting are based on their research and not yours, and hence it cannot be part of your portfolio. And I understand there are just so many coins, right? And you do not have the time, energy, and motivation to research all of them yourselves. You can take the list of the coins from these influencers as a starting point and then research and see if there is merit to the claims and reasons they have made. I've seen so many people lose money over Doge and Shiba coin because of celebrities tweeting over it, or some YouTube channels going gaga over it, right? They will make you feel that this is the last money making opportunity of your lifetime. And I want you to know that this is not true. You can also evaluate influencers' history and see what is the status of their recommendation that they have given in the past, and you will fall out of 90% of the trap. Additionally, a lot of influencers have paid private Telegram channels, and the recommendations that reaches you may be old or no longer valid. So are all recommendations bad? No, absolutely not. You don't have time to do everything on your own, but please do your own research before investing, and don't ignore the blockchain and crypto space, as the next few years are going to be very, very interesting. The second mistake as a new investor is investing without a plan. The crypto is cyclical in nature, just like stocks, and they have their period of the bull cycle and the bear cycle. If you invest your money at the top of a bull cycle, it's going to take you around 3 years to break even, and another 2 years to have 100% gain, which translates to your money doubling in 5 years, which can be achieved using a good mutual fund or a direct investment in quality stocks. So the additional risk that you take with your investment in crypto may not be justified. On top of it, you have to pay 30% on all profits, and there is no benefit of capital gains like we have in stocks. So long story short, if you invest without a plan, then the crypto investment may turn out to be worse than a mutual fund and a stock investment. Solution: well, buy quality coins regularly, even when the market is dipping, especially when the market is dipping. Don't shy away from taking interim profit, and don't invest the money that you'll need in the next few years so that you can give the portfolio sufficient time to grow. The third mistake as a new time investor is not understanding stop loss in crypto. The concepts of stop loss that you had in stock market is not applicable to crypto. If you keep a stop loss of 10 or 15% like you keep for maybe stocks, chances are the market will dip there and then bounce up, making you regret the trade. The crypto market is very volatile. Even 20-25% dip is normal. Even for a market leader like Bitcoin, you will experience it once or twice every 6 months. So what is the solution? I prefer to take profits when the market is exploding. Then I reinvest those profits to buy the dip. Basically, I'll place a buy order for a given coin at 20-25% discount. So instead of panicking and selling it, I can accumulate during the market dips. Well, let me give you an example here. For example, you buy one Ethereum at 2,000, and then the current Ethereum price is 4,000. So what I'm going to do is take partial profit at a few $100s and then put a buy order back at 2,500. So when the market dips again, I can accumulate more Ethereum. If the market doesn't dip, well, good for my rest of the portfolio. It is still growing, right? So you can minimize your greed to maximize profit, and technical analysis can help you determine these accumulating point. But that's going to be for another. The fourth mistake that a new investor can make while investing in crypto is thinking of crypto as a short-term money-making machine. Well, yes, crypto has seen massive inflow of capital and some unreal return in the past. However, the movement, you think of it as a short-term money-making machine. I just like the feel of it. So you will either trick yourself into falling into greed or giving into fear. If the market is booming, you will put more capital, and when it dips, right, you will lose faith and sell at a loss. It is important to zoom out and look at the crypto for the value it actually brings. Not an investment advice here, but selling Ethereum today can be like selling Amazon stock back in 2002. There is so much value to be realized that selling a good coin early may bring in a lot of regret later. Today, a lot of people bought Doge and Shiba coin because of hype and influencers tweet in order to make some quick money. The coin prices today have collapsed, and people who did not have the time to sell or who did not sell at the right time is at a huge loss. I've attended sessions in Clubhouse where people are asking that, hey, I have invested all of my savings into Doge and Shiba. Now I don't know what to do. So it is very important to purchase coins which can be good in the long run, right? Do not fall into this short-term mentality that, hey, I want 100% profit tomorrow, because, well, some days you'll make it, most days you won't. Well, I have lost the count here, but I think it's the fifth point, is not diversifying your investment. It may be tempting to go all in on a really good coin, which is solving problem for people, generating revenue, but not diversifying is a bad advice in stock, but more so in crypto. There are too many things that are beyond people's control. The coin can be hacked, the founder can turn out to be a cheat, the government can impose regulations, or a better coin comes out, right, which solves the problem better. So one very recent example is Wonderland Time, which was a very promising, very handsome yield-giving coin, right, which was giving 80,000% return. And many people, including myself, invested in the project. And 6 months later, the founder had a rift, and it turns out their protocol was fraud. They were cheating people worth millions of dollars. Had I put all my money in the protocol, I I would have been disappointed. Maybe not making this video too, but because of diversification, I have good coins in my portfolio that can potentially offset the losses. And as a rule of thumb, the newer the protocol, the more you do not understand about it, about the business model, why is it making money, and what is the roadmap for them, the lesser you invest into it. So yeah, the sixth point, and can be really painful, is losing your private key to the wallet. But well, what's the big deal? You can always recover it, right? If you forget your ATM pin, net banking login, or anything else in Web 2.0, there is a way to retrieve it. You can do a password reset, or worst case, go to the bank and someone will take you to the counter, help you retrieve your password. The Web 3.0 wallet like MetaMask, which you can use to store cryptocurrency, NFTs, and other digital assets, cannot be retrieved once lost. It cannot, there is no way. So please understand how important it is to keep this key safe. And if someone has access to the key, there is no two password authentication. There's just no way, right? Once it is gone, it's gone forever. So again, to reiterate, because of the decentralized nature, you are in full control. That also means you are completely liable. That means if you ever lose the private key to your Web 3.0 wallet, the money is like, poof, it's gone forever. There is no way to get it back unless you invent a time machine, go back in time, actually write it down, and this time you don't forget it, right? So if you don't know the difference between Web 2.0 and 3.0, watch the video in the profile. Similarly, if you get scammed, hacked, or cheated, the funds are again gone forever. You cannot go to a police, there's no complaint, you cannot do anything. So be extremely careful with your Web 3.0 passwords. It is best to write it down on a paper or a trusted mobile app and store it in a place that only you will know. You can also memorize the words if you have a good memory and revise it every day till the time you will never forget. So